Hey everybody, welcome back to FSP Forex Stock Predictions. Hope you are all having a great Thursday. I am the Vortex Trader, and today we are going to be having a look at the Australian dollar versus the US dollar on the 4-hour time frame. We had a fantastic order block play out, and I want to go over how you can learn to spot these trades. So before we get into it, please remember to hit that like and subscribe button, and let's dive right in. So looking at Aussie dollar versus the US dollar on the daily time frame, what do we have? We know that this is a major forex pair, just like Euro USD, which we did yesterday. So we have seen nothing but downward momentum since the 5th of April. And we can see we have been trudging downwards. Now, with regards to this trend line, we have only had one tap. Yes, we could bring it in like this. Yes, we could bring it in like this. So we could say maybe one tap, two taps. This is the third tap. This is not enough reason for me to do any trading on. I am simply just putting the trend line here to show you in a little bit more detail how price has been moving downwards. Okay, so we can clearly see, everybody, that price is moving down. Right. What is this zone that I have highlighted in blue? Well, this is clearly a support flip to resistance zone, right? This is liquidity. Buyers know that there are orders in this area, and we can see, funnily enough, if you caught yesterday's video on psychological round numbers, we can see that this area is indeed one of them. I will link it right at the top right hand corner of your screen. Check it out. This price is 0.705, right? So nice and whole round. It attracts us emotionally to these price points. This is why this is an area of interest. We can see price bounced off the 705 mark, carried on upwards, right? Came right through it. So it was what was once support, flipped to resistance. Price came back up to collect more orders, pierced right into this region, came back down, formed a new daily support, came back up, and now yesterday and in the early hours of this morning, this is what we were interested in, right? Once we could see on the daily chart that price was coming back up to this same zone, right? We could start thinking, okay, we know that price is going down. We need a reason now to go short. All right, so as we can see, price pierced into this blue zone, okay, closed right below it. Now we are looking for reasons to go short. We're at resistance. We can't sell just because we're at resistance. We need further information. Okay, so let's switch to our 4-hour time frame. Let's dive in deeper. What do we see on the 4-hour? Well, here is our blue zone. Okay, there is where we wicked the close of the last daily candle. Okay, now let's have a look-see. So we can see a couple of things. I can already spot two order blocks. Okay, let's draw them out for you. The second one is the safer bet, but I am going to be drawing out the first one as well. Right, so what do we have? First things first, we can see we clearly have support in this region right here. Okay, and then we clearly have support in this region right here. Okay, yes, these were wicks, but we can see that this candle, this doji candle right here, let's bring it a little bit closer, wicked onto the support, and these two candles that followed, the bodies closed on this support. This is why I am referring to it as support. I'm holding my fingers up, inverted commas style. Okay, this is support. This candle closed below this support. All right, yes, it closed into these wicks, but it still closed further than these two candles did. Okay, then we had the wicks themselves come back down, form a support. This candle right here wicked onto the support. This candle wicked onto the support. This candle wicked onto the support. This candle wicked onto the support. This candle, upside down doji, right? Upside down gravestone candle, whatever you want to call it, wicked onto the support, right? So now we were looking for this area to be broken, which we can see with this candle, it has been broken, right? So I see two order blocks that I'm just going to highlight here to show you what I'm looking for. This is order block number 1. Okay. And then this is order block number 2. Now don't worry, I will be highlighting the exact candles themselves to show you exactly what I'm looking for. Okay, let's start with order block number 1. This candle, this bullish candle, the most recent bullish candle before the price broke down, before the price came down impulsively and wicked into the support, was the first order block. This candle right here. I highlight it in yellow, right? And I wait for a retrace into that zone. So for now, let me just delete this. Okay, I hope you guys are still with me. We can see this candle, put a circle around it. The following candle impulsively closed below this support line. We waited for a retrace back into this yellow zone, right, before taking the pair south. And that we can see happened quite beautifully. If we would have entered on the 50% mark, which is what I like to do, and put our stop loss a couple of pips above the order block itself, we always look for a 1 to 4 RR at the very least. We can see, well, that happened quite nicely. Okay, that was number 1. Let's get rid of this for a second. Guys, if you are unsure about it, please post below in the comments and I will do my best to help you out. Okay, order block number 2. This is the region right here. Right, there we go. Let me put a circle around the actual order block itself. There it is. Right, beautiful. Now, what are we waiting for? We waited to see whether price would impulsively break previous support, which it did. This was previous support, remember? Just to make it easier for you guys, I'm going to literally highlight the zone and call it so you can follow along. Previous support. Great. With 3 P's. Great. Okay. Previous support. This is our order block candle, the most recent bullish candle before our impulsive break. Here is our impulsive break. Now, what are we waiting for? We are waiting for a retrace back into the order block zone, which we got quite nicely. So we can set up our short position. I like to do it, as you know, at the 50% mark. But I'll stop a couple of pips just above the order block itself. And we know that we like to get a 1 to 4. And there we have it. 1 to 4. Price retraced before carrying on back down and wicking into our target. How did we find our target for the second one? Very simple, right? This area right here, we can see resistance, flipped support. So this is price structure, right? This is liquidity. Let's do this right there. Let's make this one green. Okay, this was our target. This was our target for order block number 2. Previous price structure. What do? We look left, look for previous resistances, flip supports, areas of interest. Make sure there is enough space for us to get at least a 1 to 4 RR on the trade, right? And this one happened beautifully. We got that very, very nicely. So again, just to recap, this trade is with the trend because on the daily, remember on the daily, we have seen nothing but bearish price action, right? So we know that we came and wicked up into this previous support flipped resistance zone, right? And we're waiting to carry on further south. This is our bias. Our bias is bearish. So we are looking for reasons to go bearish, right? But we can't just sell because we think we're at a support zone. No, we need further information. So we dive in deeper. We flip to the 4-hour. And what I like to do, as many of you know, is look for order block zones. I love these order blocks on the 4-hour because it fits my lifestyle perfectly, and it fits my temperament and my mental capacity, my emotional capacity. This is the type of trading that I enjoy, right? I also like doing pattern trading, which a lot of you know. But these order block zones, when they happen, and boy, do they happen often, these are a fantastic strategy to employ and use for yourself. But like I say, we have to backtest them. We cannot just dive into them and use them, right? Not every order block is going to work. Not every order block is going to get filled. And a lot of them are just going to go way past your zone and stop you out, right? This is why we have to be certain of very strong. We have to have a set of rules that are firmly printed in front of us. In fact, even better than printed, handwrite them down yourself. There's something that happens to the human mind when we are physically writing down notes, right? And when we are writing down our trading rules, we need to firmly ingrain them in our being. They have to be inside our soul, right? This is why I like to write it down physically. I have it in front of me at all times. I have my list of rules, my list of criteria, things that I look for when I'm entering a trade. I don't just enter blindly. And this list of rules came and was born from hours and hours and weeks of backtesting, months and months and months and months and months of backtesting. This is how we accumulate our data and formulate a trading plan. So please do not go jumping into these types of trades blindly. Backtest them for yourself. See what works for you. But okay, on that note, I think I have spoken enough. Let's wrap up this session. Guys, if you have any questions or comments, or you want to know more about the strategy, please do not hesitate to post it below in the comment section. If you are seeing anything else on any other major Forex pair or commodity or crypto or stock or grain or whatever you trade, please feel free to post it below in the comments. I have posted the link to our website and our social media profiles below in the description. As always, thank you very much for watching. Please remember to hit that like and subscribe button on your way out. And I will most definitely be seeing you all in the next one. See you later. Bye.